Good morning, traders. Welcome to another edition of Technical Talk. Today is Monday, the 28th of March, and time is now 8:49 GMT plus 1. So look, guys, the final full week of March is now in the rear-view mirror. Global focus, however, remains on the conflict between Russia and the Ukraine. Peace talks are ongoing, though appear difficult at this time. Market participants also continue to digest Fed action following the first interest rate hike since 2018 on the 16th of March. Hawkish comments from policymakers, including Fed Chief Jerome Powell, together with spiraling inflation, have major investment banks calling for multiple 50 basis point interest rate hikes this year. Now, in terms of where we are in the markets in early London hours, as you can see, European equity indexes are higher across the board. UK's FTSE 100 is up by 0.3%. Germany's DAX is up by 1.2%. France's CAC 40 is up by 0.9%. And the Euro Stoxx 50 is up by 1%. In terms of US equity index futures, however, we are lower right now. The Dow Jones, S&P 500 and the NASDAQ 100 futures are lower by around 0.2%. Now, in terms of where we are in the currency market right now, we are seeing considerable moves to the upside in dollar yen in early trading. As you can see here, we are up by 1.4%. Now, this follows last week's rally of 2.4%. I believe we are month to date up by around 8% now. So it's quite a considerable move in the dollar yen currency pair. As you can see, also Aussie dollar is up by 0.2%, and New Zealand, the dollar Swiss is up by 0.5%. So look, in terms of Aussie dollar, we are seeing higher moves across the board. Aussie against the Japanese yen, 1.6%. Aussie against the Swiss franc is up by 0.7%, and the Aussie against the New Zealand dollar is up by 0.6%. Now, finally, in terms of cryptocurrencies, we are also seeing a positive, upbeat move. Look, Bitcoin is trying to cement some position above the 40,000 mark. I do have a good chart on that showing some clear resistance actually forming. But look, Ethereum against the dollar is up by 5%. Litecoin against the dollar up by 4.7%, and Ripple against the dollar is up by 3.2%. Now, in terms of the economic data this week, a talking point, of course, will be Thursday's US core PCE release. That is expected to show an increase of 5.5% year on year. Of course, Friday, we also have the US employment situation report scheduled for 1:30 p.m. GMT plus 1 again, guys. All of the times I talk about are GMT plus 1. So look, the US employment situation report is scheduled for the 1st of April. So look, as of current estimates for the US employment situation report, the non-farm employment change for March is anticipated to have added 448,000 payrolls, quite away from February's 654,000 print. US unemployment is also set to tick lower to 3.7%, and average hourly earnings, as you can see on the calendar, average hourly earnings is anticipated to have dropped 0.4% in February, though the year-on-year figure is anticipated to have advanced to 5.5%. Now, other notable events to be on the to be mindful of this week. Of course, today BOE Governor Bailey speaks at midday. Again, guys, GMT plus 1 times. BOE Gov Bailey speaks midday. That's really all we have on the schedule today. For Tuesday, we have US JOLTS job openings This comes in at 3 p.m. 3 p.m. And we also have US CB consumer confidence again at 3 p.m. Now for Wednesday, an early start for New Zealand's ANZ business confidence at 1 a.m. This follows MPC, the BOE's MPC member Broadbent speaking at 10:10 a.m. And then we have the US ADP non-farm employment change at 1:15. Many traders do consider this a precursor to the main headline US non-farm employment change release. Slightly following this at 1:30 p.m. on Wednesday, we have the final GDP quarterly over quarterly release for the US, and then we also have crude oil inventories at 3:30 p.m. Finally, on Thursday, excuse me, we have Canada GDP month over month release, expected to have increased to 0.2%. Now, look, also on Thursday, as I've already said, we have the US Core PCE Price Index, and that comes in at 1:30 p.m. US weekly initial jobless claims also at 1:30 p.m. anticipated to have increased by 200,000 filings. Finally, we have the Chicago PMI to round off the day at 245. Now, in addition to Friday's US employment situation report, we also have the ISM manufacturing PMI out of the US at 3 p.m. As you can see, we are expecting a no change. Now, finally, over to the charts as we head into the week. Now, for those who read my weekly market briefing, you will be aware of some of these charts of what's going on and things like that. So hopefully this will serve as a good reminder. Now, on account of the trend direction on the euro, the longer term trend direction, it is lower according to my chart studies. So so weekly resistance at 11.74 and daily resistance at 12.24. So between 12.24 and 11.74, I do anticipate some resistance to come into this market should we rally higher. But look, it's important to remain cognizant of the prospect of continuation moves lower, as we're seeing right now, targeting the daily decision point at 0.788, 0.854. And this is largely due to the clear downtrend we're in the euro right now. So we may not even reach these resistances before we look to pop lower. Now, shorter term, the H4 trend line resistance taken from around the high of 1490, has proved relatively effective. Friday, we did see a modest rejection from this level. And look, I did say we could see further selling come about from here. If we break these lows, then we are likely heading, these lows were around the 0.962. We have broken those lows. Look, the only area of support I see right now is 0.903 on the H4 timeframe. Now, I also did on the H1 timeframe, I did highlight this area here between a Quasimodo level of 0.958 and an area of Fibonacci support. But coming in around the 0.971 region. Also, which was complemented by a trend line resistance turn support, as you can see here. But look, I did note that there is a possibility we could break through this area due to where we are on the bigger picture, right? So we have the weekly time frame pointing lower. We have room to move lower on the daily time frame, and we have room to move lower on the H4 time frame, all connected with this overall bearish technical perspective we're seeing. So the break lower should not really surprise, and we are now retesting the underside of 0.958. Now, with that being said, I do anticipate further selling in this market to potentially challenge the H1 Quasimodo support at 0.932, followed by a potential run to 1.09, the 109 handle. Do note the 109 handle also converges closely with the support on the H4 time frame, which is the next downside target on the H4 time frame at 0.903. So this overall picture really points to further selling on technically further selling beyond this Quasimodo support. So traders could be watching this area to bounce, and then should price overthrow this level at 0.932, look, an intraday bearish theme could open up and take aim at 1.09. So overall, I am very bearish on the euro right now. Moving over to the Aussie dollar. So look, the area, this is the weekly time frame, guys. So look, the area between prime resistance at 78.49, 75.99, and a traditional resistance at 75.01 is of note for me. And this is largely because of where we are in the trend right now. Now, I understand a lot of traders will have different opinions regarding the trend status. For me, we are still clearly lower in this market, and this is just a deep, long-term pullback, okay? I could be wrong. Prices could continue to rally and break these highs around the, the 81.15-ish region. If I am, that's the way it goes, doesn't it? That's the way. There's no guarantees in trading, right? So, but look, according to the trend, according to my analysis, we are in a deep pullback, and this correction here from this this move to the upside could indeed be not be a dip buying opportunity, but more so a sell-on rally scenario from this prime resistance, as I said, at 78.49, 75.99, and 75.01 resistance. It is between these areas. It is between this area, this small void here. I am looking at potential selling to emerge. Now, in terms of the daily time frame, this is where it becomes interesting for me. We have broken a trend line resistance. We've also broken above the 200-day simple moving average, and we've also broken a pattern neckline for a double bottom formation. Now, these are all bullish signals. So as you can see, we have seen a follow through buying following the break of all of these structures. In terms of upside targets for technically, I am looking at I am going to be looking at the pattern profit objective at 76.60. This is from the double top pattern. All I've done is extended from the breakout point, the value of the lowest trough within the double bottom pattern to the neckline, and then extended that value from the breakout point. So that comes in at 76.60. We also have a Fibonacci area of interest between a 100%, this comes in there, 100% Fibonacci projection at 76.41 and 76.10. So between 76.60 and 76.10, I do anticipate some resistance to form here. Interestingly, though, this area actually is glued to the underside of this weekly prime resistance. So what this tells me is we could see further upside emerge in Aussie dollar medium term until we reach the underside of this prime resistance. And now this is where we will likely, it's potential we could see active sellers make a show. Look, in terms of the H4 and H1 timeframes. Now, look, bear in mind, I do anticipate a pop higher going on the higher timeframe charts, but we do have resistance on the H4 timeframe between two Quasimodo resistances at 75.47 and 75.27, alongside a 1.272% Fibonacci expansion. Now, this area, as you can see, is holding sellers back. Holding buyers back, but sellers appear, they're not willing to commit. It looks, we're not seeing much in the way of bearish candles. We saw one attempt lower, but that was quickly countered. So look, if we do drop from this area, I will be looking at the Quasimodo resistance turn support at 74.51. Again, guys, this is on the H4 timeframe. Now, this is where it gets interesting for me. On the H1 timeframe here, we do have price bouncing or rebounding from the 75 figure. Now, with this being said, given the immediate trend is to the upside shorter term, this will attract a dip buying theme, right? So we've broke above the round number. It's common to see traders attempt to fade this level. Now, what I'm seeing here is a void of where stop losses will be positioned. So we'll have stop losses from those attempting to fade this area plotted below here. Okay, with that being said, if we break below the 75 handle, knowing we're also coming from H4 resistance, This will also attract breakout sellers. So below here, we'll have a void of sell orders, that will likely push price into this prime support at 74.65, 74.82 for a potential bounce higher. Now, should this occur, should price bounce higher and we close back above the 75 handle, then I do anticipate, as we've seen from the higher time frame charts, follow through selling to around the 76 figure, which aligns closely. As you can see, 75.99 is the lower side of the weekly prime resistance. So I do anticipate further buying to 76-ish should this occur, should this whipsaw scenario occur. Now, that's all I really have for the Aussie dollar right now. Now, look, in terms of dollar yen, I'm not really going to look at the short-term charts. I mean, look, it's just on fire lately. We've also just recently popped above daily resistance at 123.72. And look, we're on the verge of connecting with a weekly Quasimodo resistance at 124.42. Look, guys, all I really will say is we do have potential upside resistance on the bigger picture between 124.42 and 123.72. Whether this will be enough to hamper the upside movement is difficult to tell. Another point I thought was worth highlighting is the RSI, the Relative Strength Index, which is primarily a gauge to measure price momentum. It's not relative strength, as in where we're dividing two markets between one another. It's relative strength going on a ratio between upward movement and downward movement in a market. So as you can see, the RSI is considerably higher within overbought territory right now. Now, the interesting thing is we've not been this overbought since September of 2014 and the 3rd of January, January of 2013. If we go back, if we skim back, the only time we've been this high really is since late 01. So these are considerably overbought values for this market on the daily time frame. And look, we could see a potential bout of profit taking on the back of this. So moving over to the pound dollar. For anyone that's followed my weekly market analysis, you will note that I'm still bearish on the pound. As you can see, we are still lower overall. This could be therefore just a deep pullback, and this could be a continuation to the downside maybe. With that being said, we are testing the underside of a prime resistance on the weekly time frame at 34.73, 32.03. As you can see, we formed, look, some candlestick traders will say this is a shooting star, but for me, look, the lower shadow is just too prominent for me. Look, I do get it. We have sold off from best levels last week, and it is for me, it's a half-hearted shooting star bearish formation. Anyway, we are coming off prime resistance at 34.73, 32.03 on a weekly time frame, alongside a clear downside objective for me anyway. This tells me we are potentially heading for 27.19 weekly support. This is a clear downside objective for me on the weekly time frame. Now, what this tells me on the daily time frame is the break above this resistance at 30.82 was, I did say it in a number of market reports, that it's unlikely we are going to reach this resistance at 33.55, largely because of where we are on the weekly time frame. Given this, we have seen the pound sell off against the buck. So we are now, look, we're on the doorstep of retesting 30.82. Should we break below this support, this confirms the bearish. Should we break the daily support at 30.82, this confirms the bearish position on the weekly time frame. And look, it targets the descending channel, the daily descending channel of around beyond the key 130 level at around 29.30-ish. Now, in terms of the bearish picture we're seeing on the weekly time frame, I did also note that we are testing the underside of resistance at 31.94. An interesting point on the H4 time frame. Let me just zoom in. An interesting point. Look, as we have remained in position below 31.94. 31.20 is a key support level to me. It may not look much, but if you take into account this whole area here, it is. So if we break below this area, if we break below this support, I do not anticipate much support coming in from the market at these points here. The reason being is it's almost compressed as we've rallied higher, right? So look, as you can see, we rallied higher, a strong lower shadow formed, filling filling a large portion of the bids. Again, we did the same here, filling bids, filling bids, filling bids. So this is the last line of defense for me. If we do come below here, I do anticipate a rather deep, a strong sell-off, potentially targeting the lows around 130-ish that were on the 14th of March. So, and obviously, of course, support at 29.65. So this is 31.20 is an important area to be watchful of, watching on the H4 timeframe. Now, in terms of the H1 timeframe, of course, look, the 132 handle, as you can see, it proved, albeit chaotic, it proved itself as a resistance, and this was helped by a trendline resistance, a trendline support term resistance in the second half of the week. As you can see, we have dropped lower, as I did anticipate a possible drop in the weekly market report. Look, in terms of downside objectives on the H1 time frame, we do see a modest Fibonacci cluster around the 31.11 region. And then followed by that, we have the 31 handle and then Quasimodo support at 30.75. Of course, guys, do remain aware. We do have 31.20 to be that's above this area on the H4 timeframe. So look, if we do close below here on a H4 basis on for 31.20, I don't expect much buying pressure to emerge from this area. So we could be in for a bearish picture, targeting 30.82, which is which is aligned closely with this Quasimodo support. So I don't expect much from the 31 figure if we close below this H4 support. Below here, we are then targeting, as I said, the Quasimodo support on the H1 time frame at 30.75 alongside the daily support at 30.82. Finally, onto Bitcoin. Now, this is a Fibonacci market right now. As you can see, we have broken above a key resistance area at 45.828. 43.972. Now, with this break, look, this was a strong break yesterday on Sunday, a strong break, which caused a lot of pain in this market. We have been lower since late last year. Now, with that being said, we have been lower. This is a trend, if you will, an immediate trend to the downside. And look, traders have been trying to sell into this, right? So they have been trying to sell the rallies from this resistance area. But Sunday's break above this area, filled a truckload of stop loss orders, right? So it filled a truckload of stop loss orders, tripping buy stop orders, as well as given the overall trend in this market is higher. Okay, although we have had deep corrections, the overall trend is higher. But what this has done is this has also tempted breakout buyers into the market. So what this has done is tempted breakout buyers into this market at an area of Fibonacci confluence between, as you can see here, 48,381, 47,656. Now, this is a Fibonacci cluster for me. And look, as you can see, we have tested the lower side of this region and are on track to form what's known as a shooting star bearish candlestick formation. Now, should we continue lower from here? I do expect some bullish intent to form from here, the support area. But look, if we close below here, I do expect a move down to at least a 42,504. Okay, guys, that's a wrap from my side. Look, thank you so much for taking the time out of your day to join me. Look, questions and comments, please feel free to send to either FP Markets, www.fpmarkets@support.com, or alternatively, the emails, not www, excuse me, guys. The emails are fpmarkets@support.com, or alternatively, directly to the research team, Market Analyst at fpmarkets.com. With that being said, have a wonderful week ahead. Trade safe, and I'll catch you all again bright and early on Monday morning next week.